Strait of Hormuz closed. We are currently witnessing a $3.2 trillion loss in global equity value in under 96 hours. But the screen is lying to you about the true cost of this event. Today, we map the zero flow reality. We are going to look at why oil is being suppressed, why China is entering a state of emergency, and why $88 silver is the greatest paper fiction of our lifetime. 20 million barrels. That is the daily heartbeat of industrial civilization. As of this week in March 2026, that heartbeat has stopped. The Strait of Hormuz, the single most critical 21-mile stretch of water on this planet, is effectively dark. The silence in the Gulf is the loudest sound in the global economy right now. While the media is focused on the kinetic exchange of fire between U.S. carrier groups and Iranian coastal batteries, the real war is being fought at the waterline of maritime law. The withdrawal of insurance has done more to close the strait than any naval blockade ever could. On March 5th, the global reinsurance market effectively vanished for this region. No ship moves without a promise to pay, and right now, the only promises being made are of total destruction. Drop Crucible in the comments. It signals you are awake in the dark. It tells me you are doing the homework. Let's look at the numbers. Let's look at the math they want you to ignore. The Strait of Hormuz handles roughly 21% of the world's seaborne petroleum and 20% of the world's liquefied natural gas, LNG. It is the narrowest point in the global energy straw. When that straw is pinched, the pressure doesn't just rise, it explodes. Now, when that door closes, 20 million barrels of oil per day vanish from the global ledger. To put that in perspective, the world consumes roughly 104 million barrels a day. You cannot lose 1/5 of your energy supply and expect the lights to stay on. Saudi Arabia and the UAE have invested billions in bypass pipelines, the East-West pipeline to the Red Sea and the Fujairah pipeline to the Gulf of Oman. But their combined capacity is barely 6.5 million barrels. That leaves a structural, unfixable deficit of 14 million barrels per day, with no physical way to reach the market. This is not a temporary inconvenience. This is a logistics nightmare. It takes an additional 15 days for a VLCC, very large crude carrier, to reroute around the Cape of Good Hope. That is 15 days of ghost supply, oil that exists on a ship but cannot reach a refinery. For the manufacturing hubs of Asia, China, India, and South Korea, which receive 80% of the oil transiting the strait, the clock is already in the red. In South Korea, the cost-buy index has triggered emergency circuit breakers 3 times this morning. They know what the West is trying to hide. Without the strait, the petrochemical, steel, and electronics industries of Asia face total stagnation within 30 days. They don't have the strategic reserves to weather a 60-day closure. If the paper price of oil is only $70 to $80, why are the industrial giants of the East preparing for a total shutdown? Because they know the difference between a digital ticker and a physical tanker. One is a bet, the other is the fuel of survival. The headlines say Iran vowed to close the strait. But the strait was actually closed by a group of executives in London, Zurich, and New York. This is the invisible blockade that no one is talking about. On March 5th, the Joint War Committee in London designated the entire Persian Gulf as a high-risk area. Maritime insurers immediately pulled war risk coverage. Let me explain what that means for the global economy. For a typical supertanker carrying 2 million barrels, even a tiny increase in insurance premiums adds millions to the cost of a single voyage. At the current risk levels, with Iranian drones striking tankers and U.S. jets engaging in dogfights over the water, the premiums have spiked by 5,000%. It is now economically impossible to move oil through the strait, even if there wasn't a single mine in the water. A ship without insurance is a ship that cannot dock at any major port in the world. It is a pariah. There are currently over 200 oil and LNG vessels anchored outside the strait, essentially floating in a state of limbo. They are sitting ducks, waiting for a clarity that isn't coming. The U.S. Treasury is reportedly considering a plan to trade oil futures directly to stabilize the price. Think about the insanity of that. The government is attempting to print a lower oil price by manipulating the paper contracts, even as the physical ships remain at anchor and the refineries run dry. This is the ultimate proof of the Crucible Markets thesis. The system would rather maintain the illusion of price than face the reality of scarcity. They are printing digits to hide the fact that they are losing the atoms. Now let's talk about the silver slam. How does silver drop from $94 to $88 while the most critical energy artery on Earth goes dark? This is where the amateurs get liquidated and the predators get fed. You must understand the industrial growth trap. Now, silver is the nervous system of the modern world. It's in the AI chips, the energy grids, and the defense systems. When the algorithms see Strait of Hormuz closed, they don't see safe haven. They see global recession. They assume the industrial demand for silver will vanish because the factories in Shenzhen and Seoul won't have the oil to run. They price in a growth scare, and they slam the metal to shake out the weak hands. But here's the divergence, the source code of the reset. While the New York paper price was dropping to $88, the Shanghai premium was moving in the opposite direction. In China, where they are literally running out of gold and silver bars, the price stayed above $102. The premium between the East and West has widened to a staggering $14 an ounce. That is the highest physical-to-paper divergence in the history of the modern market. This is the Great Decoupling. The West is selling paper because they fear a recession. The East is buying physical because they fear the death of the dollar and the collapse of the energy grid. In a world where 30% of global energy is offline, which asset would you rather have? A digital contract that says you own silver in a COMEX vault that might be empty, or a 1,000-ounce bar in your own possession? The $88 price is a gift to the informed money. It is a temporary anomaly created by algorithms that are still programmed for a world that ended in February. The 150 EMA on the hourly is your floor. If it holds, this was the last great shakeout before the physical reality takes over. The paper wall is high, but it is thin. One more week of a closed strait and the paper market will simply cease to function. The closure of Hormuz is the final test for the old world order. We are seeing reports of secret outreach by the State Department to end the conflict. But the military movement on the ground says otherwise. Israel is striking Tehran. The US is striking Iranian warships off the coast of Sri Lanka. The war has already leaked into the Indian Ocean. There is no going back to the status quo of January. This is a systemic shift. We are moving toward a logistics of survival. India is being forced to deepen its reliance on Russian crude because it cannot wait for the strait to reopen. China is tapping its massive strategic reserves, preparing to export refined fuels at massive markups to a starving Europe. The map is being redrawn in real time based on who has the atoms, not who has the debt. Your protocol for the next 14 days is critical. Watch the maritime insurance, forget the carrier groups. If the war risk coverage doesn't return, the strait remains closed regardless of what the politicians say. Monitor the Brent WTI spread. If Brent, the global benchmark, stays significantly higher than WTI, the US benchmark, it tells you the energy island of North America is separating from the global reality. Track the Shanghai gold price. If the Eastern premium hits $1,900 on gold, the paper markets are effectively dead. At that point, the price is whatever you say it is to the person who needs your metal. You are not a victim of this conflict unless you choose to be. The reset is designed to make you panic and sell your hard assets for a paper price that doesn't exist. The Crucible Markets way is to watch the flow, because in the end, you can't eat a ticker, and you can't run a world on promises. You need the metal, you need the energy. Everything else is just noise. The artery of empire is closed, the 20 million barrels are gone, and the paper markets are pretending it's just another Tuesday. They are whistling past the graveyard. I want to hear from you. What are you seeing in your local economy? Are gasoline prices jumping? Are you seeing out-of-stock signs at your local bullion dealers? We need the ground-level data to see through the simulation. Your reports from the field are more valuable than anything coming out of Wall Street right now. In our next briefing, we're looking at the barter street. How to trade for what you need when the price on the screen no longer matches the cost at the counter. We will look at the rise of metal-based barter and why silver coins are becoming the neighborhood currency of 2026. Hit the subscribe button, turn on the notifications. The reset is moving at warp speed, and the data is your only sanctuary. Don't trade on hype, invest with logic. Stay skeptical, stay prepared, and most importantly, stay sovereign. I'm out.